Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, November 15th. Hope you guys are having a wonderful morning thus far. We got a lot to go over today, so we're just going to jump right into it. We'll start off, of course, every week, every Thursday, we get the weekly jobless claims. So last week we had 214,000 people apply. The reports came in last week for 214,000 people apply for unemployment. Forecast for this week's was 210,000. It came in a little higher. It came in at 216,000. Still multi-decades low level, but again, we saw that have a slight uptick versus going lower than we thought. We also got retail sales for the month of October. So in September, there was a contraction. It pulled back at 0.1%. Forecast called for 0.6% for October, and exceeded that 0.8%. Now, when you take out the big ticket items like autos, again, it did the same thing in September. It dropped 0.1%. Forecast called for 0.5% or half percent, and it jumped up 0.7%. So a lot of the big sales were obviously without autos in October's retail sales. So that's very good news there to keep an eye on there. We got manufacturing numbers out of the Philly and New York region here, these next two indexes. So the Philly region is the Philly Fed. In October, it was at 22.2. Forecast was supposed to be at 20, and it dropped much more than people expected, down to 12.9 in November. Now in the New York region, however, it had the opposite. It was 21.1 in October, and it jumped up to 23.3. So a little mixed in terms of what we see for manufacturing in October or November here, at least in the Northeast area. Then we go to import price for the month of October. So in September we had a 0.2% increase. In October we could see it jumped up 0.5%. And last but not least, business inventory still seemed to grow. We had in August it grew 0.5%, and in September it grew 0.3%. So positive numbers right there. So let's try and jump ahead here to the headline news here. Stock market is down. A lot of this is taken as cue. We got the Brexit going on here. Theresa May, the Prime Minister over in England, presented a plan before her party in England or in the UK yesterday, and totally got dismissed. Everybody just blasted her. They think there's concerns that she may lose power. She's just, this is coming up in March, so the whole Brexit, the pull away, the divorce, between the UK and EU is supposed to happen in March, and they're trying to get a trade resolution that could satisfy both parties, but it's a big concern because nothing could be. You got England with their internal politics as well as trying to negotiate with the EU to try and make something work, and it's so far it's making investors very, very queasy here. And again, and this is on top of economy in Germany as well as Japan. Looked like this past week they had some a drop in the economy. So the concerns is that this all kind of unwinds here. You got the comments by Fed Powell basically saying that they're dissecting what he had his interview yesterday, and his interview was after market hours. So they're kind of digesting what he said, and basically their thoughts are in tune with what he said. Basically that the U.S. economy is doing well, but there are some economic concerns on a global level here, and that's kind of what they are feeling. The concerns is with the Brexit, that there might be a hard pull, and if that happens, that could create a lot more turmoil in the markets. And then we still got the standoff between China and U.S., and if they don't have some type of negotiation completed or some type of trade agreement soon, those tariffs could be jumping from 10% to 25% coming in January. So that's something just around the corner that could also spook the markets a bit more, or at least concern the markets more, and lead us kind of this bear market, that a lot of investors are kind of concerned about. So also today we got Walmart. We still got these Q3 reports, and Walmart came in and they missed on their revenue, and this is again kind of concerned along with the that its economy is as strong as they anticipate it to be, if people aren't spending as much. So let's kind of jump ahead and see how this is affecting the bond market. This is making the bond market do well. It's now, yesterday we were testing the 25-day moving average. Today we open above it. We'll have to wait and see if we can stay above it. Right now we're up 9 basis points, not quite enough to get better pricing. If the lenders did not get better pricing yesterday, they should be giving them better pricing today. So pricing should be a little bit better today if they did not give that do a reprice for the better yesterday, as rates did improve. I mean, the market did improve for it during the day yesterday. And as you can see, treasuries are getting pushed down lower, which is helping the mortgage-backed securities and lowering interest rates. And right now, it's fighting this this next level, which was supposed to be support, but it's may not hold, and that's the 50-day moving average. And right now, we're down to about 3.09 right now. And if this continues, the next level of support will be at 3.05. And again, this is helping mortgage-backed securities and its yield and its interest rates. So pricing. So pricing again is a little bit better today than what we saw yesterday. All right. So you guys have a great rest of the day. If you guys want to get any updates, any changes that might happen throughout the day, just come on over to Twitter. You can find me at Mike Bjork on Twitter. Enjoy the rest of the day. Thanks so much for watching. Look forward to see you guys tomorrow. Bye-bye.